Really appreciate all of you having me. I am a School of Foreign Service grad 2006, which seems like just yesterday, but I realized that for some of you, that was when you were, in like kindergarten or something. I don't know. It's it's much further away than I think I like to think that it is in my head. I recognize some of you. Harsh is here on the call, who is an intern actually at Founders Fund in a pre-COVID world, and some of you I recognize from the flight internship interview process, which, as Jody said, was really exciting. Great to see so many people apply. We ended up pulling the ripcord like many companies because in a COVID world, it's pretty hard to have a venture capital internship since the entire thing is about team interaction. And our team basically just like went on interaction hiatus for like 4 months because of macroeconomic volatility. So this was not the right time to do it, but we will revisit, God willing, next summer and hope to have maybe one of you as part of the program. So yeah, I want to make sure that we leave as much time as we can out of this 45-minute chunk for Q&A, but I'll kind of frame up the conversation, let it go from there. So first I'll describe what venture capital is very briefly. I'm assuming most of you probably have a pretty good grasp of that. And then I'll talk about my path to venture capital. And then we'll go into some like more detailed kind of like interaction things about what a day looks like. And then I'll break into questions from there. So what is venture capital? So basically, there are companies that get started. Oftentimes these are called startups. And they need capital to run, but they're high risk businesses. And they're high risk because historically over 90% of startups, venture-backed startups, fail. It's not like 90% of them aren't super successful or 90% of them aren't unicorns. No, like 90% of them don't exist 5 years after they start. And banks don't lend to companies that likely won't exist in 5 years. They lend to much less risky asset classes. And so here is where the asset class of venture capital enters the scene. If you think about like a fund, and I'll use very round numbers for this discussion, but let's say you have a $1 billion fund that you're investing out of. Historically, the way these returns are allocated is it's not like there are 100 companies that we invest in that all return meaningful capital to our investors. Actually, just one or two are the vast majority of our returns. So if we like 5x a $1 billion fund, there's a pretty good chance that there were some $10 billion companies, some $20 billion companies, some $30 billion companies that contributed literally billions to that return, and everything else was a zero. So if you think about this from a graph perspective, there's like a linear graph, which is like a kind of an even distribution. And venture capital operates on what's called a power law distribution, which means that almost all of our returns come from a very small set of investments, and everything else is so insignificant that it's basically just a zero. So we've been around since 2004, so just over 15 years. And we've invested in over 350 companies in those 15 years. 10 companies that we've invested in have returned 95% of all returns over that time. So you can like break down what that percentage is. And so what that means is that this is a power law investing category. The only thing that matters is home runs. Singles don't matter, doubles don't matter, triples really don't even matter. It's either like a home run or it doesn't matter. For us, those companies are many that you're probably familiar with, which is Airbnb, SpaceX, Spotify, Stripe, Palantir, StemCentrx, Postmates, Oscar, Wish, Affirm. I could come up with a few more, but that's basically the big winners in the portfolio. So that's kind of like what the industry is. Now the question is, how did a kid from Georgetown School of Foreign Service end up in the industry? And that is a great question. And I think this is where I would love to spend my time kind of engaging with you guys. It would be easy to believe that someone that would end up in a financial investing firm would come from a financial investing background. However, the best venture capital firms actually don't have that characteristic to them. They're generally started and run, operated, and invested out of by former operators, people that worked for companies that had raised venture capital and have seen inside of a company what creates a success story, what strategies don't work, and they have a very different risk tolerance than someone who would maybe be like an investment banker at a Goldman or a JP Morgan or something like that. So how did I end up here? I started my career in the intelligence community, like a lot of people that graduate from Georgetown School of Foreign Service, that you'll never hear them actually admit. But your friends that tell you they're going to work for the State Department, probably working for the intelligence community. So I worked in the intelligence community for 3 years. While I was there, I had this kind of like crazy expectation that I was going to be interacting with like James Bond or Bourne Identity technology. Like I was going to have the access to the coolest toys. I was going to show up and they were going to hand me the keys to an Aston Martin and like send me on a cool mission. And I showed up and I had a CRT monitor and Windows 98. This was in 2006. I was in a cubicle with 2 people who didn't do any work. Like they just sat around all day and talked about Washington, D.C. sports teams. And so on like day 3, I walked in with Bose noise canceling headphones, put them on. I was like, all right, I'm going to tune out all of these like people that are just like, you know, sucking off of the taxpayer a tremendous amount of salary and benefits to do nothing. And my boss came by and he was like, what's the deal with the headphones? And I was like, yeah, I'm just trying to, there's a lot of noise, trying to tune it out. And he's like, are those noise canceling? Like, yeah, they're noise canceling. So you have to have a waiver to have noise canceling headphones in a classified space. So like you need to go to the IT division and get a waiver. So I like walk over there and they denied my waiver. So that was my first week experience is, no, you're not even allowed to tune out the people that aren't doing work here. And so I washed out pretty quickly. About 2.5 years in, I saw a demo of this software that I was blown away by. And I was like, wow, this would change my entire life. Like I would save a day a week in efficiency by using this software. And it was this tiny little software company that no one had ever heard of. They only had 10, 15 employees at the time, called Palantir. And it was being brought in by the CIA's venture capital firm that's called In-Q-Tel. And I started making this argument internally that like, wow, we should use Palantir. This would save us a ton of time. And my boss told me no. And he said, if you believe that there is a requirement that's not being met by the technology directorate, you need to write up a program request for what requirements you feel like aren't being met. And then we will make a decision to fund or not fund that gap in technology. And so being naive, I actually did that. I like spent a week like writing up a program request, turned it in. 48 hours later, I get a stamped document back, denied. This is not a requirement of the agency. And so I ended up emailing the guy who gave the demo at Palantir. And I was like, hey, I hope you're not wasting your time here. It's not going to go anywhere. I'm fighting this internal battle. And he just like literally responded, LOL. I know, I like gave up a long time ago, but we should get coffee. And so I sit down with this guy, keeping in mind, I was going to spend my entire life being a civilian in the intelligence community. That's why I went to Georgetown. And I sit down with him and he says, you're dying inside, aren't you? And I was like, yeah, I'm dying. He's like, you are not a government civilian. I just know that you're not a government employee. I believe that you're a tech employee. I'm like, I don't understand. He's like, come out to Palantir. We'll like try to fix all of this from the private sector. And so I, rolled the dice, joined Palantir, was one of the first 20 employees there. And then for the next 6 years, rode one of the most incredible rides of startup growth that's happened in the last 20 years. Went from 20 people to over 2,000 people. Saw an enterprise growth of, I think it was like a $40 million enterprise value when I joined, to a $24 billion enterprise value right after I left. And then for those of you that track the stock market very closely, you probably noticed Palantir went public a couple of weeks ago, which was a huge win for the company after a long time. Anyway, so while I was at Palantir, obviously like working on, for a software company, coming out of a Georgetown liberal arts background was kind of unclear to me how I was going to contribute. But it turns out that I'm reasonably extroverted. I understand the technology. I understood the customer use case. And so I started working forward with our customers, you know, kind of selling the software, training people on the software, working to identify new problem sets that it could be applied to. And within like the first 2 years that I was there, I ended up taking over business development and owning like kind of the whole revenue engine for the company. And in that role, interacted very frequently with our board of directors. So the chairman of Palantir's board, who's one of the co-founders, is this guy named Peter Thiel, who started PayPal. Peter and I became really good friends. And after I had been at the company for about 6 years, he asked if I'd be interested in coming over to Founders Fund. And that was back in 2013. So again, like not knowing anything about a software company, I joined a successful startup company. Not knowing anything about venture capital, I was asked to come and join Founders Fund. So, you know, sitting here at one of the world's premier venture funds for the first like few weeks, I'm kind of scratching my head, kind of like I was in the early days of Palantir, like, how am I actually going to be useful? Like, I don't know anything about finance. I couldn't tell you what all these acronyms mean. Like, what is a, you know, customer acquisition cost? What is, you know, like basically just like going through all of these things, like I'm just confused. And it turns out that the same skill set that was valuable to me at Georgetown, the same skill set that was valuable to me in the intelligence community, the same skill set that was valuable at Palantir was equally valuable at Founders Fund, which is original thought. And this is what Peter kind of identified when he asked me to come to Founders Fund from Palantir. It was that I wasn't content with the status quo. And you know, I grew up in rural America in a little farming town, went to a very bad public school and got denied to every college that I applied to, and ended up like flying to Washington, D.C. and sitting in front of the admissions office demanding to see the dean of admissions to plead my case, which I did. Eventually got into Georgetown, obviously super unhappy with the intelligence community, was fighting internally to get that to work, didn't happen, so I left and joined Palantir. So this is kind of like a recurring theme was, what is it that you believe to be true about the world that your peers would disagree with you about? And I think for me, I always had an answer to that question, always. It was like, I had one answer to the question was that I wasn't going to be content with going to Ohio State like the rest of my peers. And I believed that there were outsized returns available to students who ended up pushing to go into elite universities. And I think I was right about that. And then in the government, I said, this is not okay. Our tech is actually terrible, and we're not going to be able to do our jobs effectively unless we fix this problem. And I'm not content to sit around for the next 10 years gaining GS pay scale levels by playing the political game that everyone else is playing. And so this is kind of the thing that I think makes, and I would love to hear from Harsh too, since he spent a summer with us. But I think this is like one of the keys that makes certain venture capital investors really good, is that they sit in the present and they say, what is wrong right now? What is wrong? And how can we apply efficiencies from technology to fix those things that are broken? And that's going to look different for every industry. Obviously, like online payments is going to look different than like, you know, power generation, which is going to look different from, you know, self-driving cars or whatever. Like all these things have very different problem sets inherent in them. You know, when I was doing the flight internship interviews, one of the things I was most shocked by, I already cleared with Jody that I was going to bring this up. It's going to sound really harsh, but I was shocked with how little original thought existed in the Georgetown community. It was a lot of people just saying the same things. Like, you know, I would ask this question, what do you believe to be true about the world that most people would disagree? 40% of people that I interviewed said they believed that people were fundamentally good. If 40% of people believe the same thing to a question about what you believe that's different, you don't actually have a good read on what your peers believe to be true. And I think that's like a key characteristic that is really important to get right if you're interested in an industry where your job is literally to disrupt the status quo. You should have answers to this question. And so I would encourage you to think about that. Like, what is it that you believe to be true that would get you kicked out of a dinner party for believing is true? And you should be comfortable expressing those views publicly, because otherwise, like, it's just like a track. Like you're just like doing the thing that you believe you have to do to like proceed to the next level in your video game. And you don't get power law returns for doing incremental, leveling up over time. So anyway, what is the day-to-day like in venture capital? It's transactional, highly transactional. Our entire life is composed of 1-hour meetings. You go into a pitch, very generally speaking, nothing about what the founders of the company are coming in to talk about. They give you their, 40-minute pitch. You ask a bunch of questions. The meeting ends and you make a decision. Do I want to move this forward aggressively to the rest of the partnership? Do I want to kill it dead in water? Just like this I know that we're not going to get this through. Or do I do more research to find out like if there's an opportunity here that maybe I'm not aware of, or a competitive landscape that I might have very little insight into. So every year I do about 800 to 1,000 meetings, pitch meetings. So that's like on average for a business day, like 3 to 4 pitches a day on average. And I say yes to about 15 companies a year. And so you have to be really tightly calibrated on saying no very quickly in the cases where it's just not, there's just no way you're going to get approvals to do it, because otherwise you're just going to burn all of your time doing diligence on things that have no path to success internally from an investment perspective. Keeping in mind, you're going to get things wrong. Like there will be cases where I invest in things that end up not being good. There are also cases where I pass on things that end up being very good. And those are the ones that really bother me. So I keep a spreadsheet of all of my biggest misses, and I have real misses. And that is the type of thing that should eat at you every day when you're in this job. But it's all about moving very quickly. And so basically the pro to this is that within a pretty short period of time, you get to be an interesting dinner party guest, because you have 6 inches of knowledge about basically everything. So like I could talk to you at very shallow depth about nuclear power. I could talk to you at very shallow depth about recycling facilities, like you name it, like, but I have no depth. It's all just like very shallow. And that's the negative. The negative is that if you have any operational desire to like build something, venture capital is not a great place to do that, because you don't have the time, energy, or focus to be any more deep than that like 6 inches of shallow perspective. That this is true more than anywhere else of Founders Fund, because the reason we're called Founders Fund is we're a fund for founders. We want to invest in founders that want to run their own business. There are other venture funds that are more operationally heavy, that want to like participate in governance and executive strategy and recruiting and stuff like that. You can get a little bit deeper in those types of funds, but that's expressly not what we do. So that's like a very quick overview, and I did that in 20 minutes. So now we have the next 20 minutes to just explore anything you want to explore, and I'll shut up and turn it over.